I was reminded this morning. I was on a phone call with Denise Scholl, fantastic neuroeconomist who we're going to be doing another series of interviews. And she brought up a topic that is near and dear to me as far as a teacher and a trader, and one that that you really have to work on when our partners come and work with us here in Bend, Oregon. And the issue or the concern that people have is one that you see in teenagers, it's one that you see in adults, and it's FOMO. If you've never heard the acronym, it's fear of missing out. And it got me thinking. I haven't done kind of an updated video on the fear of missing out and how it can be so dampening to returns as a trader and opportunities on both levels. So I wanted to talk a little bit in a video about that today. And FOMO is really, a label for an irrational fear, one where the person believes they will miss out or regret if they fail to take a particular action. So this can lead to, it's not only in trading, but in any business. This can lead to suboptimal levels of performance, and can be really dangerous and a detriment to the longevity of a trader specifically. If you can't get over this, if you start reacting and behaving in ways that are irrational, and really don't understand why you're getting into a trade or out of a trade, and that fear is overriding, it can be really bad. And probably doesn't balance with your plan of being successful. Paradoxically, the FOMO can result in creating a situation where the person is trying to avoid. In other words, they miss out. So it's really two factors there, and I want to touch on that. Some of the typical effects that FOMO can lead to for traders. Traders end up feeling overwhelmed, and they're basically paralysis by analysis by the markets. They're sitting in front of the screen too long. They start lacking the ability to focus, to orient themselves to the current environment where they may be in a productive manner. They overtrade, they undertrade. All these things can be effects that come from this. This may also be seen in people, kind of just staring off endlessly into the screens, not even doing anything, unable to tear themselves away for more than a few moments. And this, again, very detrimental to the success or possible success. So think about that. That's one area where FOMO comes in. The crowd is another area. So let's say you're in a chat room. And this is why I think chat rooms are just silly. Unless you have your own thoughts and can really think through why you want to behave and why you want to trade in a market, the crowd can become, you can give into it. You start following the crowd and taking trades that you don't even understand why somebody else is taking them, and you're taking them. It's another reason why I don't think alert services make any sense for anybody, because until you understand the reasons why to get into a trade, where to take profit, and where, more importantly, the losses and the risk is, why are you in the trade? So don't listen to group think. Get educated, get mentored. This again comes into play here. Get with somebody who can help you to avoid these common traps, okay? And so you need to have your own independence in thinking. Listen, I love when students come to me and say, hey, take a look at this trade. And I do. And many times it's a great trade. And I'm like, you know what? I didn't see that. I had one just the other day where I hadn't been trading beans in a long time. And somebody came to me and said, hey, take a look at the beans. What do you think? I'm like, oh, you're spot on. Great spot. So another reason, I love working with students is because they're smart. They're smarter than me. Hopefully they go away and they come up with ideas. So have your own thoughts when it comes to this business. Also, the FOMO leads to kind of this illusion, or this false illusion of control. I have no control where the trade's going to go, how it's going to end up. All I can control is where I put the trade on and where my risk is. Outside of that, I have zero control. What the market's going to do, because it did this last time, doesn't mean it's going to do it this time. So that FOMO, again, presents itself in a too much this illusion of control, and that effect sometimes can be highlighted and show in a poor performance. So keep this in mind when you think you're missing out on a trade because you missed one in the morning. There's always another trade. When do you get out of trades? This is another area where FOMO shows up. Can I get out at the right time? And can I even get out? A lot of people they end up holding for too long. You'll never go broke taking a profit, and you know what? This is why I leg in and I leg out, because I can't be perfect, and you got to let go of that perfection. So the inability to exit trades either for profit or for loss is really the same condition, and again comes from and is symptomatic of somebody who's in a FOMO. If you have, it also can cause great impatience. In other words, I make a bad trade. I've seen people do this, and I've done it in the past. I got to get even. Fool's game. Don't do it. You're not missing anything. Wait for the right setup. Wait for your plan to come into play, and wait. All right. This is really important. And then overloading. So getting too big. If you've got your maximum size is 10 lots, never trade bigger than that. Matter of fact, I try to live below my means when it comes to expenses, and I try to live below like my capitalization